Let's get back to Gene Munster from Loop Ventures. He's still with us. He's been listening in on this call on the red phone. Gene, you there?
Yes. So yes,
Okay.
I am. Melissa, I just want to walk through exactly. I can simplify what's going on here. Is that this 3 quarters? Several, in my interpretation, is 3. High single digits is 8. That means that there's a 24% deceleration in growth. They just did 42%. So if you extrapolate that, that means we're going to hit Q1 of 19 somewhere around 18% growth. And the street right now is at 35% growth. So this is a measurable re-rating of the growth rate. I suspect, given the numbers are going to be bigger a year from now, that that's probably the trajectory that analysts will have. So if we go out even looking at the 2020 numbers, the street was looking at 24% growth. That new number is probably going to be 13 to 17%. So that kind of explains it at the core, I guess, why is this actually happening? That is still not fully understood. Some of it's related to engagement. Some of it's related to yield and advertising yield.
Even with this guidance, Gene, are you comfortable that the company has a good handle of how much they will actually spend come the next quarter, or how much revenues will continue to decline going into the back half of the year?
This is an unprecedented guide down. So I think that they are taking more probably of a measure than they need be. Maybe in fact it's not 18%, ends up being 22%. So to answer your question is I am comfortable that we're not going to have another issue next quarter where they ratchet down growth even more. I think they see what's happening with the engagement in business, and they're taking dramatic steps to reset expectations. And I think they're probably going slightly too far, but I think it still is representative of a new paradigm, a new view that the investors need to have about the growth rate of Facebook.
This has got to be a historic decline that we're seeing in Facebook shares right now. It's down by 22%. Gene, what do you do with this stock down 22%?
I think you need to let it settle out here. There's a good chance that they do, in fact, end up beating some of these lower numbers, but we shouldn't be having that conversation over the next couple months. I think you just stay on the sidelines, let the investor base process this, and visit us where things are at in 2 months.
Is this the earnings out of FANG that sinks the group? I mean, we saw Netflix that was traded like an idiosyncratic story. In the after-hour session, though, we're seeing, for instance, Amazon, which has yet to report, that's down 2%. Netflix is down 2%. Alphabet, which I'd already reported and had an A- quarter, according to you, is down by more than 1%.
I think, the FANG is largely intact. I think that Facebook and Netflix are the less desirable of the FANG for a lot of reasons, not just what's going on today. But I think the substance of the FANG, Google and Apple and Amazon, they have such big growth opportunities ahead of them over the next several years that I don't think that there's anything that is going to fall apart with these FANG as the leader.
Gene, this is Pete Najarian. You talked about unprecedented guide down, and I totally agree with you. I mean, this was totally out of left field, and obviously the way the stock is reacting, that shows that. But you said you need to probably stay away for a while. How long is a while? How long do you have to stay away from a stock like this to let this sort of settle down? Is it a quarter? Is it less time than that? Is it more time than that?
It's a quarter. I think, I was talking about 2 months, 2-3 months, kind of this 1 quarter period. You may miss a bounce here. There's that risk, but I think the prudent approach here is let this kind of flush through all the analyst models and people kind of rebase. I'm sure you're going to have a lot of analysts come out tomorrow given this big drop and defend it and say this is a big buying opportunity and it's not down 22% tomorrow. But I think you just largely stay away for it for the next quarter.
Hey, Gene, it's Tim. What about ad growth and certainly the advertisers, right? 6 million advertisers if you look across the entire platform. Where they're going to wait for the metrics, I realize, but are they getting concerned here?
We haven't seen, even after all the issues 3 months ago, haven't seen material advertisers leave the platform. So they've been surprisingly, in my opinion, loyal to Facebook. And so I think that there is, again, this piece around engagement impacts revenue, and they're coming out with new formats with video and the Instagram TV, but still that's not having a positive impact. So I think there's something more around that engagement. I do think that Facebook still largely has the support of advertisers, but we're kind of figuring this out real time.
Hey, Gene, it's Dan. Well, what about China? Last week, CEO Mark Zuckerberg told Kara Swisher of Recode that they are not going to be doing anything in China anytime soon. And then earlier in the week, we saw that they put in an application for a new venture in China, and they've already been bounced out of that. Is the timing of this kind of coincidental? Because if you think about it, China is just the most important market that they'll never get into unless they make some big headway. And that is really the only way this company can ever grow users again.
That's exactly right. China is the biggest X factor. There's obviously Messenger and WhatsApp and what they can do. But if you just think about, we're talking about engagement. That's the key topic today. And around engagement, China is absolutely the biggest variable. It is something that most U.S. tech companies, with the exception of Apple, most U.S. tech companies have not been successful in China. Facebook's going to have to approach this with a partnership and a close hand with the government, which I don't know culturally how that lines up.
Gene, a lot of analysts, a lot of investors were just in awe of Facebook shares after that really steep bounce off the Cambridge Analytica lows. And here we are, we're about, $15 or so away from those lows once again. Do you think we breached those?
I don't think we get that low. I think we're going to probably get a little bit of bounce where the loyal Facebook crew comes in defense tomorrow and says it's not that bad. But I think that in general, this is going to be range bound, and I don't suspect we're going to get below those Cambridge Analytica dark day levels.
Gene, not Gene. Gene, hold on. Guy, do you think we breach those lows?
I think, if I remember right, it was 144.
Was it 144? I see 150.
140.
Okay.
I think it was 144, 145, I seem to recall. And I was one of the people on the desk that said it's going to languish around these levels for quite some time. I never thought we'd get back up to 215. But here we are retracing the whole thing. Personally, I don't think we get back to those levels. I'm hard-pressed to believe we get there. I do think a cleaner Facebook is in everybody's best interest. But so many people piled in, and you see, stairs up, elevator down. This is a great example of that.
I go to you as a Facebook holder.
Yeah, frustrated Facebook holder.
What do you do now if you believe, Gene, that the stock is going to be range-bound for now? What do you do with the stock?
It certainly could be. It could be in this range bound. I think Gene's brought up a couple of different times, though. You're probably going to see a few of the analysts come out somewhat defending themselves and saying why the stock's going to likely see some sort of a bounce of some sort, maybe. I think there is opportunity. I am frustrated like everybody, though, because this kind of came out of left field. And Gene said himself, unprecedented guide down. This really was. This wasn't forecast at all in front of us that these issues and these revenue numbers were anything close to what they are.
In terms of the stock, though, you hold on to it. What do you sell call? What do you do?
I will hold on to the stock. Obviously, the calls that I actually own in there as well are going to go to zero, and it's going to give me an opportunity to make decisions over time. I will be buy writing this because I still think there's something
calls
there
against your position.
And as Gene was saying as well, they probably have overshot to the downside in terms of some of this guidance. And if that's the case, maybe we'll see some numbers in the future that are a little bit better than what we're talking about tonight.
I think the overall impact for the market here, too, is when you think about Netflix and you think about Facebook here, I mean, these are stocks that really people believed no matter what, and whatever valuation. And I realize different valuation story because Facebook, people can argue, is cheap. Although now suddenly, again, if you're growing at, low single or, low teens with this price, I mean, it's not cheap at all. So it just, the sentiment and the euphoria. And again, to me, Facebook, a company with still a lot of questions and not necessarily answers. I think the market needs to address the whole group.
I actually think this says a lot about market sentiment. Every day on this program, or every program, every hour on the hour, we talk about FANG, 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 and it's like a cult following. And let me tell you something. This has been a PR train wreck for over 6 months. I mean, it's just every time Zuckerberg opened his mouth, it was one just disaster after another, as recently as last week. So to me, the fact that investors bought this thing up to an all-time high in front of a print where they've been telling us for 3 quarters that expenses are going higher. They're hiring here. They know that they have this huge
They said going higher, but did we have any sense at all that when they were saying it's going higher, that it's going this high?
Listen, Pete,
I mean,
this
look
is a
at the
company
margin
that just
numbers
printed a 40% revenue growth year over year. I mean, it's stunning, okay? It's astounding. Over $50 billion in respective sales this year. I mean, at some point, it had to cool out,
well,
right?
It was already going to cool.
But there's a difference between cooling and dropping, right?
But no one believed it. That's what I'm saying. No one believed it. No one believed it. And Gene just said that.
I think the street was at a lower 2009.
Gene's still on the phone. Hey, Gene, do you feel like Facebook should have warned? I mean,
no, they didn't. I mean, they did everything they could. People were just intoxicated here, and so they just missed it. And I think so. Facebook, I think they did everything that they could. They told us last quarter this was going to have an impact on engagement. It was a very simple connect the dots that analysts needed to make, and they didn't do that.
Everybody missed that warning. I mean, unprecedented
Well,
guide down. This is an unprecedented miss on the part of Wall Street analysts.
I absolutely think it is. As I looked at the numbers going into the print tonight, I wasn't expecting this kind of reaction, but was surprised that they were still looking for DAU and MAU growth as to the level that they were. And so I think it is. It's an example of just groupthink around a story. And I mean, I don't want to throw Facebook any more under the bus than we already have here, but I think that's exactly what happened. I don't think Facebook is to blame. I think analysts and investors are to blame.
Gene, you've been doing this a long time. Is there a read-through of the broader market? I mean, the NASDAQ is basically making all-time highs seemingly every single day. Do you take it that far, or is this Facebook-specific? Or does it not even matter at this point?
I think it's Facebook specific. The other companies are going to be impacted by it just because they're all at the other FANG stocks are at all-time highs, too. People are going to get nervous. But if you look at other companies, like just take, for example, Apple and the amount of cash they're generating, about how much stock that they can buy, about the opportunities that they have in front of them, it's a very different story than Facebook, which is a social platform. I mean, there's companies like Apple and Google that are fundamentally changing the world. And so I think that I think tech investors can rest easy that we're still decades more of growth to come.
So, Gene, if investors are moving away from Facebook, is there another stock in your coverage universe that you think gains on the back of this?
It's a no-brainer. It's Apple. This has been the one that people are reluctantly liking. Most people, 75%, MarketWatch reported, believe that Amazon will reach $1 trillion before Apple. And they have this massive buyback that's going to be coming with this net cash neutral, stable iPhone business. I think even though it hasn't been a very exciting story, I think that the substance of investor gains are going to be in Apple of all places.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.